Mark is joining us now from Baltimore, where the company is located. Mark, thank you so much for being with us to chat about the quarter and what's been going on. And first of all, you heard Margaret mention what happened with bond funds. Of course, as you know, this is the first quarter of fixed income deposits in more than 3 years, or about 3 years' time. To what do you attribute the turnaround in fixed income in particular?
Well, thank you, Julie and Margaret. It's great to be here. The catalyst is improved performance to our clients. Western, our largest fixed income manager, has superb 1-, 3-, and 5-year numbers, and that's being seen across the globe and being rewarded with inflows.
I'm curious, I got to ask you about it, even though it wasn't talked about in your quarter, obviously. But this whole debt ceiling debate, right, since we just heard Jay Carney talking about it, it obviously has a lot to do with what some of your fund managers are doing with their money at this point in time, particularly when you look at fixed income. What's your reaction to what's going on in Washington? How is it affecting you guys business-wise, if at all?
I think first and foremost, this is a time for leadership. We as a country and our leaders on all sides of the aisle need to come together and get this behind us. I believe the markets are factoring in the assumption that some deal will get done, although there's a contingency out there if there isn't, and we will work through this. At Western, we believe that a deal gets done, but there are still issues that are going to need to be worked through, and we're prepared for all contingencies.
Can you talk to me at all about what the Treasury strategy is, or is that something I should talk to Steve Walsh over at Western about?
Yeah, I think Steve has been very clear that, the current handicapping is probably 80% probability of the current issue being removed, an acknowledgement that broader structural reforms which need to be done will probably be pushed off, but we still need to stay on that. In terms of managing our portfolios, we're prepared both in the short and the long term.
I want to turn to equities here, because even though you are seeing some improvement on the fixed income side, equity outflows do continue. How are you going to address that? Because performance there has still been pretty weak.
Well, actually, we have almost $200 billion of equity assets under management, and they're spread across managers like Royce, who has terrific results and flows, Battery March, whose systematic equity strategy is being kind of revisited and performing well both internationally and U.S. ClearBridge, our largest active equity manager, did an equity MLP, a closed-end fund this quarter, raising $600 million in a space that's being very much sought after by investors. We do have in a couple of our managers, Legg Mason Capital Management, some performance issues. But they are really based, Julie, in a sense of we are valuation-driven in that unit. That's not a strategy being rewarded. But there are investors who are going to take that bet and say, if there is a sector shift towards financials, towards tech, towards healthcare, this is a portfolio you want to be in.
So just real quickly here, any target as to when you think that the equity outflows will reverse?
I think that's both a little bit of the industry. As you know, the industry, based on current conditions, have moved into outflows in June and July. And then there's a bit of it tied to just a few of our managers. So I think with the market improving, I think we get past this cloud, as was mentioned earlier, and people refocus on improved fundamentals. Really, everything ex-housing is moving in the right direction. And it's these kind of macro issues that we got to get past.
Just very quickly here in about 20 seconds, I know expenses has been an issue for you all. You've been trying to work down the expenses. It looks like you made progress on that this quarter. Have you spoken with members of the board like Nelson Peltz? Are they satisfied with the progress you're making?
Yes, I think the board, all of the board, including Nelson, are very committed to continuing to improve things. So we're not resting on our laurels here. If you take a look at this quarter, we generated $60 million of GAAP earnings, over $100 million of what we call adjusted earnings. Our free cash flow yield is well in excess of 10%. So the cash generation coming off of this business is being very much supported by our board and our investors.
Mark Fetting, CEO of Legg Mason, thank you so much for your time. Appreciate it.